In this video, I'm going to walk you through the three main components of a financial statement using Doordash's public filing with the SEC filed before the company went public this month. Now, the stars were all aligned that two of the most high-profile IPOs of 2020, Doordash and Airbnb, happened in the same month that I was looking for YouTube video ideas. If you haven't already, I recommend that you watch the video I did on Airbnb last week. I have to admit that when reading the financial statements of Doordash, I thought I was going crazy, and you'll understand why when you watch this video. There were so many similarities between the two sets of financial statements, which I thought was really interesting because they should be very different companies. Just a side note, you would only go through the trouble of analyzing filings of public companies if someone was paying you to do it or if you're thinking about investing in the company. If you're one of those people who likes to scour the SEC database and read public filings for fun, I would suggest that you get your head checked because that's just mental. Okay, now let's get mental together. Now, before we begin, I have to admit to you that I had some biases against Doordash before I even started this analysis. I am your typical New Yorker who relies on food delivery services, and I've been a user of Seamless since Seamless was founded. And it's not like I'm loyal to Seamless or anything, but I just never really found the need to download another app. I didn't really know a lot about the food delivery services before I started looking into Doordash. If you're ever not sure about what a company does besides Googling about the company, you can just refer to footnote 1 of the financial statements. So I have in front of you the financial statements for Doordash, and you can get it from sec.gov and you can download it in PDF, but I just choose to read it directly from the SEC website just because I don't want to clutter my laptop with public filings. From reading footnote 1, you can see that since its founding, which is 2013, Doordash has financed its operations through the issuance of equity, debt securities, and payments received from its platform. This is something you want to keep in mind before proceeding with the rest of the financial statements. Okay, so let's start with the income statement. This is Doordash's income statement for the 9 months ended September 30th, 2020. Keep in mind that all these amounts are in millions, so you have to add 6 zeros to everything. You can see here that Doordash is one of the companies that benefited from the lockdown. For the 9 months ended 2019, they only generated $587 million versus $1.9 billion for the 9 months ended 2020. Now keep in mind that not all this growth is organic. Doordash did make an acquisition in 2019 that contributed to some of that growth. The acquisition was in a premium food delivery service provider called Caviar. So we'll talk about Caviar more later on. Moving along to costs and expenses, there's really nothing here that's striking my attention. You would think like I would want to call out this $899 million, right? So this $899 million is related to payouts to the Dashers. So as revenue go up, I would expect this number to go up as well. So it's not really alarming to me that it changed from $353 million from 2019 to $899 million in 2020. There is one line item that I want to draw your attention to, and that's the general administrative. I normally don't pay a lot of attention to that line item, but you see this increase here? That's a little bit unusual. Whenever I see an increase in G&A expenses, it's usually the result of legal expenses. So that's definitely something that we would want to look into. Pages 204 to pages 209 gives you the details of all the legal cases that are going on with the company. So this is something that you would want to read if you were interested in investing in the company, because these are future expenses to the company that could adversely affect how they do in future years. Okay, so I'm going to take you back to the income statement. The change from $179 to $337 million, $115 million of that is from legal expenses. You can see here that Doordash, very similar to Airbnb, has been operating at a loss. So I can go back even further, but let's just move along to the balance sheet for now. Okay, so now we are looking at the balance sheet. And scanning through the balance sheet, the number that sticks out to me is this $1 billion in cash. And a lot of analysts who look at this number, they're going to think, wow, this is amazing. The company has $1 billion in cash. But We know better, right? Like I said, I thought I was going crazy when I was looking at the financial statements because DoorDash's financial statements is very similar to Airbnb. So if you move further down to the liabilities section of the financial statements, you see this? Convertible notes. That's debt. So they didn't have it toward the end of 2019. So right before the company went public, they issued debt of $355 million. That contributed to part of that cash balance. And then you move further down, you see these preferred stocks. It was $2.2 billion. Now it's $2.6 billion. The difference is $382 million. So of the $1 billion, $355 million is from them issuing debt before the IPO, and $382 million is from them issuing preferred shares before the IPO. So this $1 billion that you see here isn't all from operations, and you're going to see that in the statement of cash flows as well. Alright, so let's move on to the stockholders' equity section. Similar to Airbnb, you can see that Doordash is currently running a deficit of $1.3 billion. So that's something you want to keep in mind as well. We're now looking at DoorDash's statement of cash flows. There are three main components of the statement of cash flows, and that is cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. I am happy to report that for the first time ever, DoorDash is showing a positive cash flow of $315 million from cash flows from operating activities. So finally, I have something positive to say about the company. All right, moving along to cash flows from investing activities, nothing too exciting going on here. Moving to cash flows from financing activities, see this number here, $382 million from issuance of preferred stock. We saw it on the balance sheet earlier. And then again, issuance of convertible notes, which is debt of $333 million. We also saw that in the balance sheet earlier. The balance sheet, the income statement, and the statement of cash flow should all be interlinked, like the great circle of life. Earlier, I said that I would take a look at the goodwill balance with you. So let's take a deeper dive of that goodwill balance of $306 million. Let me just explain to you what goodwill means. Goodwill is just a premium that a company pays for an acquisition. You can see that most of the balance related to goodwill that DoorDash has is related to its acquisition of Caviar. DoorDash paid $411 million for Caviar, but if you take Caviar's total assets minus its total liabilities, you get $106 million. So the premium called goodwill is $305 million. Now, I was very curious why DoorDash would want to pay 4 times the price of Caviar's fair value. There must be something that is so attractive about Caviar. So I did a little bit of digging and I found Caviar's historical financial information. In front of you is Caviar's income statement, and you can see, like DoorDash, Caviar has been operating at a loss as well. So in 2017, Caviar had a loss of $44.5 million. In 2018, Caviar had a loss of $42.9 million. And for the 9 months ended September 30th, 2019, which is right before the acquisition, Caviar had a loss of $39.9 million. So this got me thinking, DoorDash didn't care that Caviar was losing money. DoorDash bought Caviar with the hope that DoorDash would convert Caviar's users into its platform and eventually turn a profit. This is no different from when Facebook bought Instagram. Then it can be assumed that a value of a food delivery app is equivalent to its number of users. I couldn't find the number of users on DoorDash's financial statements, so in absence of that data, I'm going to use sales to estimate the price of DoorDash's stock, because sales should be closely correlated with number of users. Alright, so let's see how DoorDash is doing today on Yahoo Finance. It looks like the company is currently trading at $160.23 per share, giving it a market cap, if my computer would load, of $50 billion. Alright, so in order to estimate the price of DoorDash, I'm going to use Grubhub, its peer company, and use the sales multiple as a proxy to estimate the price of DoorDash. I basically made the assumption that DoorDash and Grubhub are essentially the same company, so if you feel differently, then I don't know what to say. In front of you is a spreadsheet that I put together where I dropped in the sales data for DoorDash that I took from their financial statements, and then I also dropped in the market cap number that I took from Yahoo Finance. I did the exact same thing for Grubhub. Then I took the market cap divided by sales to get to the sales multiple of 27 for DoorDash, and then I did the exact same thing for Grubhub and came out with 5 times multiple. Now, if I were to apply a sales multiple of 5 to DoorDash's sales, I would get an estimated price of $9.8 billion. So if you were to buy in DoorDash's stock at $160 today, there's a chance that you may lose 80% of your value when the market fixes itself. Guys, this is really crazy. We know that DoorDash is starting to see cash flow from its operations, but the company and its biggest subsidiary, Caviar, has never shown a profit before. DoorDash has been running a deficit in addition to fighting mountains of legal battles. So as an investor, you need to ask yourself, what competitive advantage does DoorDash has that will constitute you paying 5 times the price of its peer company, Grubhub? These are things that you need to be thinking about before you press that buy button. DoorDash and Airbnb went public at the same time that I went public with this YouTube channel. So I think it'll be really cool to follow these two stocks for the life of this YouTube channel. The next time that we'll hear from these two companies will be in February of 2021 when they have their first earnings release. And then their financial statements are due with the SEC on March 1st. So I definitely plan on doing a follow-up video for you in March of 2021 on Airbnb and DoorDash. If you found some value out of this video, I would appreciate a thumbs up, and please subscribe for future videos. Bye now!